hits a fresh record low against the dollar. One US dollar is now worth nearly 80 rupees. The euro also reaches parity with the dollar for the first time in 20 years. The currency sell-off takes stock markets lower. Sensex falls over 500 points. Nifty ends below 16,100. Financials and IT stocks lead the decline. Prices of steel, aluminium, zinc and other metals hit multi-month lows as commodity sell-off continues. Precious metals are not spared either, with gold hitting 9-month low and silver hitting 23-month lows. SpiceJet in more trouble. Dubai-Madurai flight delayed as nose wheel malfunctions. 9th incident in 24 days. India's retail inflation has eased slightly to 7.01% in June against 7.04% in the previous month. This is despite a slew of measures taken by the central government to ease price pressures. However, the consumer price-based inflation has breached the upper limit of RBI's tolerance band, ranging from 2 to 6% for the 6th consecutive month. Meanwhile, IIP accelerated at 19.6% in May as against 7.1% in April. Let's take a deep dive into these numbers with Prasenjit Basu, Chief Economist, ICICI Securities. Prasenjit, what are the main takeaways for you this time around? I know that the last time we spoke, you were fairly bullish and confident on the GDP front. On inflation, are you seeing a reason for further concern given that the numbers are not easing off?
Yeah, the inflation numbers are clearly a worry.
Yeah.
The fact that it remains above 7% for the second consecutive month and above 6% for the 6th consecutive month, both are bad news. And the fact that it's still above 7 means that the RBI will have to continue to tighten at a measured pace, but will have to continue to tighten. And I expect that they will continue to tighten until about October, taking the policy rate to 5.5%. So that has to keep happening.
So what does this do to the kind of growth estimates you were working with earlier, Prasenjit? Because if we have the RBI continuing to hike, we have concerns stemming from further, shutdowns in China on the supply chain. It looks like a scenario where there is no other way but to hike rates consistently now going forward.
Yes, rates need to continue to be hiked until inflation comes down to the preferred range, that is 2 to 6%. So it has, until inflation is below 6%, RBI as an inflation targeting central bank has no option but to keep raising rates. But I would stress a few things. First of all, I think that oil prices are bound to moderate somewhat as the global economy decelerates. We're seeing continuing evidence of the leading indicators for the US suggesting a moderation in growth. If you look at the ISM manufacturing new orders, they fell below 50 in the latest month, and any reading below 50 is suggestive of contraction about 6 months down the road. So already we are seeing signs that the leading indicators are suggesting that towards the end of this year, we'll begin to see the US economy lose a lot of momentum. In Europe, they are tightening policy now at long last, having kept things on a very loose policy stance until as late as March, April, May. Only in June and July have they really started to tighten. But that tightening is causing significant problems for some of the peripheral countries, including the likes of Italy, which have very high levels of public external debt. So all of that means that the global economy, the OECD economies are likely to decelerate. As they decelerate, and as you see a little bit of a pickup in supply from shale, we'll see oil prices coming off. I expect that oil prices will be in the $80 to $90 range for Brent crude by the October to December quarter. And that will help to take some of the pressure off inflation. So that coupled with the likelihood of a decent monsoon. I mean, the monsoon so far is on track nationwide.
Sure.
But there are very many areas of deficient rain. I mean, the whole of, almost the whole of Uttar Pradesh and Bihar are seeing deficient rain at the moment. So it is a fact that a large part of the country is seeing good or excessive rainfall, but there are significant areas of rice cultivation that need more rain. So the monsoon is not yet a certainty to help us on the food inflation front. Global food prices still are very problematic.
Okay, and on the IIP front, what did you make of it this time, Prasenjit? We did see an acceleration, but is it in line with your estimates?
Yeah, almost exactly in line. The April-May numbers were likely to be strong, and June is also going to be strong. Not quite as strong as May, but should be close to 10% growth year on year. So the first quarter of the fiscal year is delivering more or less on track with what should have happened, given the fact that we've had a low base effect for that quarter. Right. Because of the second wave of COVID last year. But I think it's important to understand that there's growing evidence that investment spending is coming through. We've seen that bank credit in mid-July was up more than 13% year on year, 13.2% year on year. That is the strongest in about 4 years or so. And that should contribute to the pickup in industrial production and particularly in investment spending. Okay. So growth, I think, is on track. Inflation is a worry, but I don't think that India needs to tighten anywhere near as rapidly or as abruptly as the US and EU do. And consequently, it'll be a fairly calibrated set of interest rate hikes that won't really disrupt the economic recovery too much.
All right, great. Prasenjit, thanks so much for joining us on that. The rupee hit a fresh historical low today, with the dollar index touching a fresh 20-year high of 108.2. But let's emphasize on the point that the rupee has fared better than other emerging market currencies. The Indian currency has stumbled 6.6% this year against the dollar, while Taiwanese dollar has slipped nearly 8%. So now, to boost the rupee, the RBI has been announcing a bunch of measures. Last week, it allowed banks to pay higher interest rates on foreign currency. That was a move that came in last week. And, that was on foreign currency deposits. Also, yesterday, the RBI announced steps to internationalize the rupee. Let's head across to Anand Adhikari to explain to us how this new measure by the RBI is likely to impact the currency.
I really don't see any immediate impact of these measures. Now, let's look at each of these measures. The RBI has freed up the interest rate cap on foreign currency deposit. They have also exempted the CRR and the SLR requirement on such deposit. But banks are already flush with funds. With credit growth in the economy is still in single digit. The RBI has also allowed more choices to foreign investors, to invest in GSEC and the corporate debt market. Here again, when the interest rates are rising globally, these foreign investors have better opportunity to invest in their home market without any currency risk. RBI has also, in a way, doubled the ECB limit for corporate, from $750 million to almost 1.5 billion. Now, corporates in India are also deleveraged. I mean, they are sitting on cash. We are yet to see, private capex happening in the economy. So the expansion in the capacity is not happening. So why will they borrow money now? RBI just did a move, allowing, settlement of international trade in rupee is a good move. But this will take time. The immediate worry, is the foreign investors pulling out money, from the Indian market. The global interest rates are rising. The import bill is rising because of higher global, commodity prices. The current account deficit, it is expected to almost double, to $100 billion in 2022-23. So I see, a lot of pressure building up, on rupee. in the coming weeks.
So how will these steps work? Will countries accept rupees in exchange for their imports? Joining us now, Mahindra Jaju, CIO Fixed Income, Mirai Asset Investment Managers. Mahindra, thanks for joining us. Take us through the implications of this new measure announced by the RBI.
So this is a good progressive step at this point, although the acceptance of the rupee as the settlement currency for the exports or imports will be not very high, but then the start has to be made somewhere. And given the current situation, specifically where there is a huge oil import and other commodities import, specifically when there is a government-to-government dealing, this mechanism may help. So that may get an early boost with the government-to-government rates, and over a period of time, the general importers and exporters may also come on board this system.
Sure. So take us through the implementation, the consequence of this move, how it's likely to be implemented, and the kind of detailed impact it's going to have.
No, I think implementation is pretty straightforward. There isn't too much of a challenge. As long as there is an interest from the counterparties from the other countries to settle in rupee, then the implementation is not much of a challenge. The most important part of this whole chain of the transaction is for a foreign bank to open a special rupee vostro account. Like right now, when the Indian establishments are importing or exporting, they open a nostro account with a foreign correspondent bank. So in the reverse settlement mechanism, a foreign bank, the bank of the country of the origin of export, for example, will have to open a vostro account with the Indian bank.
Okay.
So as long as they are willing to settle the trade in rupee, I think in terms of the implementation, there is no major logistical challenge. Sure. That should be straightforward.
All right. So what about the monetary policy, Mahindra? Because it could potentially make it a little tougher on monetary policy. What do you think?
Not really from a monetary policy perspective, because ultimately, even if the trade is settled in the rupee, let's say we are importing a machinery from abroad,
sure,
then the payment will still have to be made in dollars. The only implication of the reversal of the mechanism is that earlier the local person who is importing will have to find dollars and then pay to the exporter of the other country. Now he will settle in the rupee, and the other person will have to sell the rupees in the global market and buy dollars, because he is not going to keep the rupees for his purpose. So the demand pattern will somewhat reverse. It will obviously be a help in terms of the rupee stability. But then from a monetary policy perspective, it just not materially different from importing in dollars or importing in rupees. Just the currency risk shifts from the importer to the exporter of the other country, and to that extent there is going to be somewhat less pressure. But then again, he is going to have to buy dollars by selling rupees. So I don't think it establishes rupee as the brand rather than having any serious or meaningful implication for the monetary policy. That's how I understand it.
All right. Thank you for joining us, Mahindra, with a detailed look at what's on the cards for the currency. Markets fell for a second straight session, tracking sell-offs in global markets as investors were concerned over inflation and economic uncertainties. Sensex closing 500 points lower to end at 53,886. Nifty holding on to 16,000. The index was down 158 points though. Financials, IT shares, some of the biggest drags. Aicha reversed Monday's gain to end at the top of the loser chart. Other blue chip laggards were Hindalco, Infosys, BPCL and Grasim. On the upside, NTPC, Coal India, Shree Cement, Bharti Airtel and Bajaj Finance were the only gainers. Meanwhile, prices of steel, aluminium, zinc and other metals hit multi-month lows as the commodity sell-off continues. Precious metals are not spared either, with gold hitting 9-month low and silver hitting a 23-month low. Business Today is back with its masterclass on navigating the business world in the post-pandemic era. This time, we bring you the globally renowned management guru, Professor Srikant Datar, Dean of the Harvard Business School. The unmissable masterclass gives you a deeper understanding of the new trends in management and innovation. As someone who serves on the board of some of the world's largest companies, Professor Datar draws on his vast experience to guide Indian executives on global trends in business. Here's a short excerpt of his masterclass.
How you think key management practices are changing? What are the big trends that you're noticing in management practices in the post-pandemic world?
So I'd say there's several things, Rahul, that have happened, and I was sort of fortunate that I started my term as dean right around the time. So it's in the middle of the pandemic and in the middle of an academic year, and no, I would not recommend that for anyone to be becoming dean, because each of those has some challenges. But what is incredible is the amount of opportunity that creates as well. So I spoke to nearly about 1,000 individuals, went on a listening tour for nearly about 4 or 5 months. And there were 3 things that emerged as big topics that people were saying are important trends that are coming. One was the focus on digital data work. And I would say that at some level, the pandemic accelerated by years the speed at which companies are now engaging in that work. We can talk more about that. So that was one major learning. A second was, and I've always been a vocal proponent of the fact that business is a force for good in the world. If you look at the number of people that have been lifted out of poverty, if you look about the products and services that we have created as business individuals, if you look at the kinds of jobs that we've had, it's been an enormous force for good. But right around this time, one looks at the challenges in the world, and yes, one will always look to governments to play a role, but there are some amazing opportunities that come from those challenges. And so the idea is, how should business begin to think about its role in society was a second big thing that happened. And remember, this is in the middle of the pandemic, where there's a health crisis, there's a social crisis, there's an economic crisis. So people were looking for what role can business play. And the third, of course, is the major trend that occurred in terms of the future of work. And of course, as in all countries, the great reset, some call it, great resignation, others call it. How exactly should we be thinking about the way in which we would engage individuals inside organizations? So those were the 3, I think, big trends that certainly I saw in my first few months.
Watch the full interview on Friday at 10:30 p.m. BT Masterclass with the Dean of Harvard Business School, right here on India Today. Let's take a very quick break. Back with more on the other side.
날 위해서라면 날 슬퍼도 기쁜 척할 수가 있었어
Welcome back. The group of ministers on GST for online gaming, horse racing and casinos held a meeting today to review their decision of increasing GST to 28% on online gaming. The GOM has now decided to hold an additional meeting in New Delhi to finalize the report and submit it to the 48th GST Council, which will convene in August. Karishma joining us with more on this. Karishma, what's the current proposal of the GOM on online gaming?
Well, Abha, first thing has to be that this issue has been quite ongoing for some good time now. It was before the last council that GOM had submitted a proposal, a draft report that talks about increasing GST on online gaming from 18 to 28% and to bring it at par with that of betting and fantasy gaming. But today's meeting stands inconclusive as per sources. In fact, West Bengal Finance Minister has also told this to us on record that the proposal that they have come up with may need intervention of law committee to assess the legality of it under the GST law. So until the law committee gives a green signal, the group of ministers on online gaming, horse racing and casinos will not be able to take a final call. However, we are also being told that it is the end of month that they plan to meet physically in New Delhi, likely to finalize the report. And since the GST Council has now extended the deadline from 15 July to that of 10th August, the GOM is confident of being able to submit a report by then. Let's not forget that what they're actually proposing is 28% on entire face value when it comes to online gaming.
Okay. All right, Karishma, thanks so much for joining us with that. Inflation in crisis hit Sri Lanka continues to wreak havoc for the common man. People in Sri Lanka are losing savings by the second, and rising prices of basic necessities is putting a strain on household budgets. The economic crisis in the tiny island nation has reached a stage where people have to wait for 10 hours to get a cylinder of LPG. Take a look at what the people of Sri Lanka are grappling with in the face of the worst economic crisis.
Massive anger in Sri Lanka over festering economic crisis. A never-before siege on the Lankan power corridors. While the ruling class has failed to deliver, it is the common man who is suffering. As the people of the country grapple with its worst political and economic crisis, skyrocketing prices of basic necessities are wreaking havoc. Inflation has galloped to a record 54.6% in June. This year, inflation has surged over 40% in the country. Moreover, the country's central bank expects it to go as high as 70%. With food inflation surging to over 80% in June, household budgets in Sri Lanka are stretched to the breaking point. Prices of most of the vegetables have more than doubled. Onions and potatoes now cost over 200 Sri Lankan rupee per kilogram. Tomatoes are being sold at 150 rupees per kilogram. Carrots now cost 490 rupees per kilogram.
These potatoes, which look dark in color, are from Pakistan. These onions are from India, and such way are only the Sri Lankan people are getting their produce what they require for in their market. It is an extremely unfortunate situation over here where people have to suffer and they are still protesting even here against Gotha.
With soaring food prices in the island of 22 million people, 70% of households are now reducing food consumption. The locals are fighting a battle on every front. Amid a shortage of LPG, serpentine queues can be seen outside LPG distribution centres. Citizens have to wait for minimum 10 hours before they can lay their hands on a 12.5 kilogram LPG cylinder, which now costs nearly 5,000 Sri Lankan rupees.
One cylinder here costs around rupees 4,900, close to 5,000 rupees, while in black market it goes up to 12,000 rupees. That is the shocking part, and that's the reason so much restriction. Even people are ready to buy it for 12,000 rupees, but unfortunately cylinders are not available, and that's the reason people have to wait here for several hours to get a fill of cylinders.
But how did the island nation land in such a soup? The crisis comes after COVID-19 hammered the tourism-reliant economy, and this has been compounded with the build-up of huge government debts and rising oil prices. Moreover, a ban on the import of chemical fertilizers last year devastated the agriculture sector. Bureau Report, Business Today Television.
That's all we have time for on this edition of the show.
You are watching India Today.
Hello and welcome. Thank you for tuning in to India Today. I'm Pooja Shali. Let's begin first with the headlines. It's a political war over India's national emblem. Opposition parties accusing government at the centre of modifying, changing the emblem structure to make it seem more aggressive. Government refutes the teaking claims. Uddhav Thackeray and his Sena backed the NDA presidential candidate Draupadi Murmu. Uddhav Thackeray says his Member of Parliament